My panel traders, real quick update on BTC. One second, let me get some water. One second. Sorry about that. So, it's November 10th. I have to head out, so I'll make it quick. We got our all-time highs. So now the only thing that I could expect going forward is a deviation of all-time highs. I like putting it on the original high that got deviated, but you should technically put it over here, right? So either way, they both work. Break above, break out, and assuming that we do happen to deviate this high, it should take place within the next 3-day candles. So if this ends up becoming a deviation to the original time high, then what happens is you usually target pretty low at that point. That's what takes place. And you tell yourself, all right, am I going to short this and target this? It doesn't work that way. There's a lot of support on the way up. And I'll explain to you what I'm talking about. Go to your 4 hour. So this whole box over here, this range, you're not going to break it off the first attempt. Even if you sit here and take, so you went up, I did a little higher, hold on. You went up, made a high, came back down. Okay, so then you have the first pump. Okay, so this is it. First low, went up. This is your range. Right? This is a little range right here. I don't know how long it lasted, but I'll assume this is going to last roughly about, say, 2 weeks. Once you do whatever you do over here, say you trap longs, say you deviate, say you die, whatever the case is, once you get back into this range, then whatever impulse move you get up, whatever move you get up, you want to short into the bottom of the range. That's just the way it works if you're bearish. Bullish scenario, you don't visit this range. You retest the top of it where 63 is, but you don't revisit the range. So going back to behavior, I'm a big behavior trader, right? I don't really look at fibs. I mean, I do look at fibs on my phone because now I'm on the road a lot. I do look at EMAs on my phone because I'm on the road a lot. But if I'm home and I'm on my desktop, no EMAs, no fibs. I don't do it. I strictly just look at behavior, because behavior for me is key when it comes to trend. And if somebody spends 2 weeks painting this picture over here, that indicates that they want the price to go high. Now, if this broke down to the downside, instead of it breaking up to the top side, if this thing went like this, you know how bearish that would have been? Okay, so it's the same thing that it broke up to the top side. That's how bullish this is right now. 2 weeks of accumulation in a range, and you're telling me now that what happens if we do happen to break back under here into this range? That's bearish. Bearish, bearish, bearish. At that point, you want to target the lows of the deviation, and then most importantly, your impulse that led to your consolidation led to the impulse up, which is the daily order block. If you zoom out, by the way, guys, this is macro. This is not going to happen within 24 hours. Whatever I'm telling you right now is within the next 2 weeks. Please don't get confused. We're not going to dump from here down to 55 or 56. So this box over here is your daily order block, which is perfect because that opens a bigger range now. So this is your micro range, these black lines over here. Now, what happens if we create another range? Let's make it a macro range. Swing high, swing low. Just hear me out for a second. Again, just hear me out. Right? Swing high, swing low, and then in between you have this little micro range. Now, ideally, what you want to see in a bullish scenario, macro bullish scenario, is if you happen to go micro bear would be like something like this, right? You want to basically sweep these lows into your daily order block. That means that once you come down here, once you break down and come down here, and then you reclaim this line, you want to sell your wife, your kids, your dog, everything you own, and go all in. No, I'm joking, but you understand what I'm saying. This is such a beautiful long opportunity. Once you sweep the bigger ranges lows into a daily order block, it's beautiful. I'm gonna bid that pretty hard. So I've taken a lot of money out of the market. Being honest with you, I've taken a lot of money out of the market. I'm working on some kind of real estate project, a second one, with the same group of friends that I'm dealing with. The reason why I'm doing that is because, not that I don't trust crypto, of course I do, right? Whatever, you know what I'm saying. It's these exchanges are creating a very hard environment for us to be able to like move money around. Verifications, passports, non-Americans. It's very tough for us here, you know, especially people that live in America. So, my goal right now in the short term period, within the next roughly about, let's just say, 3 months, is to accumulate as much BTC as possible from these altcoins that I'm trading. I'm trying to get like 2x's or 1.5x moves off these altcoins. And then when BTC does happen to come down here at that 57, 58, 56 mark, this little order block, I'm going to punt such heavy longs and I'm going to walk away. I'm going to walk away. You have to understand something. If this is your mid-range low, I'm going to put this mid-range high. And if this is your, I'm going to paint this a different color because it might be confusing for people that are on their cell phone. And if this is your mid-range low, this is your swing low. And then this is your swing high. So you have a micro range within your macro range, right? Now, I got a DM a few days ago because I spoke about this daily order block in my previous video. I got a DM a few days ago asking me what happens if we break. We're dumping. Hold on, I gotta open up my phone to see if I have anything pending right now because I forgot if I put any orders overnight. Completely forgot. My brain is shot, guys. I'm very forgetful. I'm going to go to my wallet. Sorry about this. It's important. 1 second. I apologize. No, I don't. Okay, cool. So, basically, I got a DM asking what happens if we break this order block. Chances are you're not going to break the order block. For you to break this order block, that means that there has to be a significant waterfall. And if you happen to break this order block at the first attempt, that means more likely than not, it's going to be a wick to the top side. Maybe they're not going to make it easy for us to accumulate, to basically create a deviation of the swing, right? Swing low, swing high. I don't know. Swing high, swing low, and this is your daily order block over here. Daily OB. Okay. So maybe they won't make it easy for us. This is the most ideal situation where they create a deviation under the swing point, the swing low, into the order block. It's a no-brainer. No-brainer long. At that point, what you do is, when you see this get reclaimed, go buy your favorite altcoins. Because by the time this is going to move first, right? So by the time this thing moves to the midpoint, gets rejected, once it creates the higher low, altcoins are going to run. And then the altcoins are going to pause again when it goes back to the top side. Again, this is a bullish scenario. This is the bullish scenario where if this thing does happen to break back into the the midpoint range high, and then it taps midpoint range low, you're talking about definitely hitting the daily order block at that point. Now, there is also a what am I doing? Let me put this forward. Hold on. Daily order block. Let's get rid of this. There's one thing I want to show you guys from a macro perspective that's very important. All right, let me save this. Let's open up something like this. Beautiful. Okay, good. Okay. So again, it's going back to the range. This is your micro range. These are the black lines. Let me get rid of this because we don't need this for the time being. Open up your PT, high low PT range. Very important, guys. You can keep your daily open and weekly open. All right, you see how we got above? So we basically deviated Monday high. Monday high is blue, right? And weekly open is down here. So there's a very good chance that by Friday, this is coming right back down here at $63,000. I'm not even exaggerating. It's a simple Fibonacci level gameplay right here. Put on your fibs. You don't have to extend them. Get rid of all this other shit that we don't need, and just put on your golden pocket. The golden pocket falls at 63,000, which is also your weekly open, right? Remember, PT range, weekly open, and your Monday low. So usually what happens when you see an impulse break above like this and never retest it, you trap longs somewhere up here, and then you come back and you retest the weekly open. So keep that in mind for this upcoming week by Friday or Saturday. Very important to label it on your charts, guys. Very important. PT range, Monday high, Monday low, weekly open. Expect weekly open to get tapped at 63.3. Very, very, very important. And then also, if you want, put on your Fibonacci levels from the bottom of the higher low to the top. You can delete everything and just have your golden pocket, and just know that if it does happen to get there, it's going to be a good long scalp opportunity. Now, when it comes down here, are we going to expect a higher high? Who knows? If we do a higher low, at that point, then it's easy. Take your Fibonacci extension at that point. 1, 2, 3. Look what you're targeting. $61,000. The 1-to-1 is $61,000. A lot of confluence here anyway. It's an order block right before the impulse. A lot of confluence at $61,000. So you have a supporting 5 or 6 days worth of price action just by what's going to happen at $63,000. Lower high, short it, back down to $61,000. If you don't make a lower high and you get above the overthrow, what's an overthrow mean? This is going to be the overthrow right here. This is going to be your overthrow. Meaning, if you don't reject here and you get above this gray box, after you break and go down to 63, for example, let's get rid of this. Let's get rid of this. Let's get rid of this. So you break through this. And you come right back down. Tap 63. If you go back up and you reject this, that's your lower high. You're going back down. If you get back up and you actually break above this, your stop loss is going to be on the lowest wick after the rejection of the box. Stop loss here, you're long wherever you want, and you're targeting all-time highs again. Very simple behavior. You see this happening all the time with BTC, right? This video is more along the lines of, let's just say, educational. I don't really want to assume. Again, remember this bull flag that broke out? Look, bull flag broke out. Spoke about this in like 5 different videos. Grinded all the way down, fucked everybody out of longs, and then boom, impulse to the top side. Now, open the oscillators. Most important one to look at is your 2-day. Yeah, it's getting close, man. Like right now, this is getting close. Now it's a time to actually pay attention, right? Remember I told you guys I'm not worried. I really am not worried still, but this trend line, the blue line, if it crosses down with the signal, that's your first indication that bulls have lost steam. Because look at the daily. Right? Daily, yeah, this is going for its over-under, man. Definitely. If your MSTX on the daily turns red again, add alert. Low band algo top. Put an alert over there for the daily. Low band top algo alert. Daily, low band top alert. Bears flexing. This way, if it hits our Discord, low band daily. If it hits our Discord, once per bar close. No, I only want to do it once. No, yeah, just we'll do it once. This way we know what it is. It'll hit our Discord, okay? Weekly. Weekly DMX is exhausted. See how it's blue over here? Low band finally hit exhaustion. Last time it hit exhaustion, we were all the way, I think, if not mistaken, December. Now, what am I saying? April. Jesus, December. So we're somewhere over here, man. We're somewhere over here. I want to make this very clear to you guys, by the way. I'm going to put a different chart, just so you guys are well aware of this. Let's go into like whatever the hell this is. Is this Bitstamp? Bitstamp, beautiful. Whatever move up we get, let's just assume that we go to at least like $90,000. Yeah, say we get to 90,000. Okay, I could promise you that we're gonna get a massive 50 to 60% dump. It's gonna have a bigger magnitude than this dump over here. This right here. Okay? Wherever we top out after this cycle, okay, after that cycle, make it very clear, you guys. After, say we do something like this, or say we do something like this, whatever. After this cycle over here, after this dump, wherever this goes, that long will be the last long before a multi-year bear market. The reason why I'm stating this now is obviously nothing's guaranteed. Things can change. Fundamentals can step in. The government can come and kill everything. But the reason why I'm saying this is because if we're repeating the 2013 pattern that that John stated from last year, if we're repeating it, that's what's supposed to happen, right? So that next dump that we get, macro dump, not now, the next big macro dump, it should last roughly about at least bare minimum 2 to 4 weeks. That big next dump that we get will be the last long before the final push up, if that makes any sense. Before, like, basically long your longs, walk away, no headaches. You see how right now we're longing and we're scared that we're going to get a dump? Yeah, well, the next macro dump is going to give you an opportunity to long, say, somewhere over here or somewhere down here, where you could just buy, walk away for a year, not have to worry about it, and call it a day. Okay? So, I'm giving you guys a heads up. Right now, all I'm expecting from the short-term perspective is hopefully a little bit of a move back down to like 63 flush. Then from a mid-time perspective, or rather a high time frame perspective, high time frame meaning like a little bit under the daily. Let's just talk about time frames. Daily time frame, I'll move back down to roughly about like 57, 58. And then from there, I really do want to see as close as we can to $100,000. When we get to $100,000, you have to be cautious, because that could give you a solid move back down, roughly about 50 to 60%. That will bring you all the way back down to your 50K range. Sorry, 40K range, right? 40K range. This is pretty interesting, though. If you look at it from this right here. If this is technically, watch. Look what this, look, just hear me out. Tell me if this makes sense. If this box is your range, let's call this your range box. This is your range box. Whether this is accumulation or distribution, personally speaking, this is accumulation to me. But just hear me out. If this is your range box, right? And if we're about to deviate the range box, the most important area of interest is midpoint, right? Make it green. This is like 101. Everyone understands this, right? Range, range top, range low, midpoint, deviation, come back and revisit midpoint, right? Everyone understands. Okay. If this is your range box, that means that this is an accumulation box. That means that technically speaking, we should never break under these lows. So that means that we're going to probably see 100,000 plus before we even assume that we're going to go back to range low. Okay? So the whole goal here is to try our best to maintain position above. I'm hoping I'm painting this as perfect as I possibly can for you guys to see it my way. Here. So I'm hoping that we never break under this green box from a range perspective. So we deviate the top, come back down, say we do something like this, I don't know, whatever. I don't know exactly what's going to happen. We bounce, go back up, come back into the box, accumulate some more, and then go back up to, I don't know, where you want to go. This will be the healthiest, let's just say this is going to be the healthiest position, the healthiest behavior that you could be on and give you the best position from a long perspective if we can get this. If we go up before down, which could take place, that means that we're probably going to go for a flush. If we go for a flush, it's going to be roughly about a wick down to that 56 to 58K range before more ranging. I just can't see this dying yet. This box, let's see, when did it start? Let's just say it right here. We are roughly at almost a year in this box right now. Yeah, I just can't see it. Let me see what happened in 2000. Where are we? Well, we're on Bitstamp. Good. This took place. Yeah, but then there was different participants back then, so I can't really assume that. No, I don't know. I just can't see this thing being dead yet, man. I can't. This is too beautiful. Like, this is like legit a breakout. Even if we deviate, and we come back to green box, it's just to buy more BTC. Yeah, I'll post this for you guys so you guys get a better idea of what we stand. Range high, range low, midpoint where we spent roughly about say a month consolidating before the impulse to the top side. Usually more often than not gets revisited again back down. So regardless of where we go, we're gonna retap this. We're gonna retap. Even if we go to 58 first and go back up, we're gonna come back and retap this regardless of where we go. So it's probably gonna be a last long opportunity over here somewhere in the 40s, low 50s to like low 40s. I know it's a big range, but you have to assume something. This is a massive order block, right? Look, it's a massive order block, and I want to incorporate. So it's a monthly too. I want to incorporate the wicks as well because there's price action in the wicks. So weekly, it's a weekly block. It's a weekly consolidation block. So, yeah, let's see what happens. Anyway, regardless, let me just recap because I just sprung up a lot of information. Low time frame perspective, I don't even know, do I still have it here? Yeah, low time frame perspective, you want to assume that we do not break back under this gray box. And if we do happen to break back under this gray box, you do not want to break, where is it? Yeah, you don't want to break back under $63,000. You want the $63,000 to give you the support. Basically, if you come back down here, you bounce to 63 and go back up and make a higher high. If you lose and you go back into this old range, right? This is the old range over here, this 63. If you lose and you go back into the 63 range down here, then you obviously want to target the low, which is going to be $59,000. And then at that point, once you lose that, your daily order block is going to kick in, which is at between $56,000 and $58,000. It makes sense, right? Daily order block, if you lose and come back into the range. Macro perspective, I'm still bullish. I'm not worried about anything yet, but you have to start paying attention because the 2-day is about to give you a little bit of a crossy cross. So if you don't look at the price action, most important thing that you want to see is this. Get rid of the low band, get rid of this, get rid of all this, and just give me signal. Make a trend band black, make a signal band blue. If these things kiss and cross, you got to start being very, very careful. So we got roughly about, say, 1, 2, 3 more ticks, guys. 3 more 2-day candles at most before we start seeing some really crazy fireworks. They're going to be like this, very close. 3 candles at most. So 1 week. 1 week at most, guys, before the 2-day is either going to bounce off the trend line or like this, which is going to be massively bullish, which I doubt. Or they're going to cross like this and then create a small little higher low or small dip into an over-under like this, right? So we still got time, but be very cautious, guys. And I said it before, when LTC pumps, we have to be careful, guys. Cheers.